You're seeing a broader market shift away from growth and into defensive names. You talked about that a little bit happening in a few countries on your side of the pond there just before this. And you're seeing the same shift in the US. You're seeing NVIDIA and all the Mag 7 get hit hard today, especially. But then you're seeing a shift into defensive names. We've seen some of these defensive names appreciate double digits since the beginning of the year. Think of Bud, as in Budweiser. Think of Hershey. Think of Pepsi, Coca-Cola, Johnson & Johnson. You're seeing a rotation because of fear around trade policy, around tariffs, around a potential recession. It's not helpful when the president actually uses the word recession. That's probably not a good thing for the markets. You're seeing a lot of the fear take over, and this is showing up not in fundamentals of the market or the economy, which is interesting, but you're seeing it show up in a big way in consumer sentiment. The move to negativity, a bearishness in consumer sentiment is pretty shocking how quickly it's happened. And with the VIX essentially close to doubling since the beginning of the year, you're seeing the volatility, the fear take over, but not that dissimilar from the first Trump administration of the initial couple months of fears and freak out, essentially, of what is coming down the pipe.
Yeah, but this fear gauge spiking to 28, just from a year-to-date perspective, it's been a 60% uptick, obviously rise in the volatility index. What's that telling you? See, the other thing is also, Jeff, that I just want to add is that, there could be a confluence of factors. Yes, the uncertainty around policy would be one thing, but the market technicals were also looking very vulnerable. I mean, you were looking at forward price to earnings valuation going at 29 times for the US market. So, the markets were looking exceedingly vulnerable to any bit of bad news. And if it comes in the form of recession fears, then it can get worse.
Yeah, and I kind of expect the volatility to continue for some time. When you look at it, the US markets were very overdue for a correction. Typically, it's every year we have a correction of more than 10%. It's been 18 months, and we're not even there yet, right? The S&P is down from peak to trough a little bit around 9%, a little bit less than that. I'd expect this volatility, this downturn to continue. Again, it doesn't help from a tariff and trade policy that it's whipsawing day to day. The uncertainty is affecting executives and company CEOs of how to plan, how to allocate their resources, whether they can move forward with plans or whether they need to accelerate plans or put them in a stopping or a holding pattern. That the trade tariff policy is affecting the market without question. I do think some companies were definitely run up a bit too high. NVIDIA is actually a great example from a valuation perspective. Tesla's another, right, from the post-Trump run-up of being really too high. But you're still seeing great opportunity in the market. It's just moving, again, away from the growth into something safer, a bit more defensive. That's not going to be affected as much as trade policy, technology, and those sort of things. So you're seeing, I think, healthy change in the market, healthy changes to valuation. But I will just suggest for your day-to-day retail investors, as we have done to our clients, it's not over. We're not through the woods yet. Expect more volatility to be with us throughout this month.
Right. I just want to request my producers to bring up the 1 month chart or maybe the last 3 weeks if we can capture the nature of the fall and how intense it has been, Jeff. How much more to go, you think?
Yeah, I think we're in. I'm admittedly hoping a little bit. I've been enjoying the volatility. It's provided some trading opportunities. But I think you're going to get into correction territory here. We're pretty close to it officially in the S&P. I think we're going to go and have this month be hitting that peak to trough more than 10% down, which will qualify for the correction. I think that's going to happen. I don't think there's anything on the horizon unless Trump and the administration actually changes kind of their policy around tariffs. I don't think long-term tariffs are a problem at all because I think it's a negotiation tool.
Jeff.
We're not super worried.